Number 8 is that we're also seeing digital identity getting more pervasive and inclusive. Last month, the National Digital Identity, NIN, grew to 97 million Nigerians. It has run far ahead of the bank verification number. And that is very important. In terms of building a trustworthy financial system, knowing who is paying digitally and who wants to receive payment is very fundamental. Now that we are going to have 100 million people with digital identity for the first time as a foundation stack of the payment system, the potentials for Nigeria to move from 57 million bank accounts that we have today, or maybe put in wallets, maybe 60 million. The potential for us to move from 60 million to 100 million very quickly, if we can all collectively convert all those guys, all those Nigerians with 100 million NIN into financial account or wallet or bank, is very huge, and that will radically change the payment and the financial ecosystem in terms of the last mile. Number 9 is that despite all that we have seen, even during this cashless, the last mile, both on the merchant and the consumer side, is still largely open. The last mile, both on the merchant and consumer side, is still very largely open. If there's any lesson that cashless has taught us, it is that the number of Nigerians who needs to be brought onto the payment rail, both as consumers or as merchants or small merchants who wants to collect payments, is still very huge. Nigeria has got 41 million MSMEs. Many of them do not have any means of payment collection. These are still open opportunities, open spaces, despite all that we have collectively done, especially during this cashless period. Number 10 is that we are seeing cross-border payment plays in the middle mile. Players like Flutterwaves have built strong businesses in terms of cross-border payments. And the important thing to note is that these are historically opportunities that were all there that some of the fintechs explored, and they built unicorn businesses out of some of this, and it's still very, very early days. Let me emphasize serving markets that are not served by traditional players. Number 11 is that lending is growing, but lending is still significantly decoupled from payments. Lending is growing, but lending is still significantly decoupled from payments. One important statistics to share from EFINA is that between 2010 and 2020, payments in Nigeria grew from 22% to 45% in terms of access to payments. But lending had remained flat, grew only from 2 to about 4%. So one of the things we are seeing in the ecosystem is that payments is growing, but lending remains very flat, because both represent very strong opportunities in terms of the way the ecosystem is played. But actually a call to action. If we do payments and we cannot translate payments to access to credit, we are sub-optimizing the benefit of the payment rail in terms of impacting on the life of Nigerians. So between all of us, that's one of the problems that we have to collectively solve. How can we use the increased access to payment to solve access to credit and ensure that payment is not decoupled from access to credit the way the graph is going like a geograph? Payment this way, but credit remains largely flat. Number 12, there are two types of fintechs that we see in Nigeria. Most fintechs in Nigeria are largely still focused on serving the banked customers, but they are serving the banked but underserved customers. That's where most of the fintechs are playing. But we're also seeing players like OP who are focused on serving the excluded. So I think the potentials are huge on both sides, but the potentials are even bigger if you recognize that the last mile in terms of increasing access to customers both on the merchant and the consumer side is still very, 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 very uncontested. There's still a lot to do, despite all that players like us have done. And to challenge the conscience of many of our fintech players, how do we ensure that while we chase the customers of banks, we also chase customers who have not been served at all and bring them into the financial system? Number 13 is that we are also seeing increasing regulatory scrutiny on fintechs as many of the fintechs get systemically important and bigger. Some of the historical advantages of being less regulated that fintechs might have had some of them might be eroded as some of the fintechs gets bigger and they come under detailed scrutiny by regulators. We must continue to be humble, those of us in fintech, and respect the banks. Banks are heavily regulated, and there are major regulatory costs that banks have. As we grow and become bigger, these are some of the things that we ourselves in fintechs will have to deal with as a result of our size. Number 14 is that we are seeing smart infrastructure play as a competitive advantage. If there's any lesson that we can learn from the first quarter of this year, the lessons are the stories of players like OPay, that if you have smart, intelligent infrastructure that can respond in an agile way to things like transaction surge, like we saw in quarter one when the market moved towards digital, it can be a real competitive advantage in terms of building a reliable customer experience that will bring massive flow of customers to your platform. So smart infrastructure is becoming a competitive advantage, and OPay is the classic example of that.